Okay, the first problem that we're going to work on today is M1-2. M1-2 is from chapter 1. The letters in front of the problems, they each indicate the type of problem that you're dealing with. Since this is the first chapter and the first problem that we're dealing with, I'll briefly mention it. M would stand for mini exercise, E would stand for exercise, CP would be coach problem, S would be skills development or skills building. These just indicate the type of problem you're doing. Obviously the M or the mini exercises are going to be a little more basic. They're going to deal with 1, 2 concepts at the very most. Then as you progress, the exercises will be a little bit more complex. Coach problems usually give you some sort of hint or something like that to help you along with the problem. But again, those are more towards the level of exercises, etc., etc. So M1-2, it asks us to match each definition with its related term or abbreviation by entering the appropriate letter in the space provided. I've listed out for you the terms or the abbreviations out here. All this information can be found in your book. So the reason why I assigned this problem is I want to get you familiar with the terminology that we're going to talk about as the semester progresses, okay? I want you to have a framework of what it is each type of word means, okay? The first one, SEC. SEC, they just want to know what the letters mean. This is indicated by letter I. And SEC stands for Securities and Exchange Commission, okay? Regulations of the stock market. Next one, investing activities. Investing activities is denoted by letter F, but before we talk about this, what I want you to do is put a star right here, a star right here, and a star right here. Okay? These are the 3 sections of the cash flow statement. We mentioned in chapter 1 about the cash flow statement, okay? The 3 sections that it's split out into is operating, investing, and financing activities, okay? So let's differentiate from each one of these. We said that investing activities is letter F. Letter F indicates buying and selling productive resources with long lives. You can sum this down to what is it that they do with their money. When you have a company, okay, that buys something such as an equipment, they're not doing it for the kicks of it. You don't spend money just to spend money when you're in business to do something, okay? You expect some sort of return from what it is that you're investing. If you buy equipment, you expect that equipment to generate, widgets, right? And those widgets are then sold to end consumers who give you their money and you generate a profit. So investing is investing in resources with long lives, such as equipment that has a long lifespan, such as buildings that has a long lifespan. Next is financing activities, because I want to differentiate between these 3. So financing activities is denoted by letter G. And letter G indicates transactions with lenders and stockholders. You can sum this up with saying, how is it that we get the capital, the financial capital that we need? Lenders denote creditors, right? We talked about the balance sheet equation in chapter 1. Balance sheet equation was assets equal liabilities plus stockholders equity. Creditors will be on that liability side, or lenders will be on that liability side. Equity will be stockholders. If you trade on the stock market, right? You buy stock in a company, you give them money. They raise capital, okay? And then they're able to invest that capital, investing activity, invest that financial capital into real physical assets that they then use to generate a profit, okay? The last section of the cash flow statement that we put a star by here, operating activities. Operating activities is denoted by letter H. Okay? Letter H indicates activities directly related to running the business to earn a profit. Sum it up, what are they in business to do? That's operating activities, okay? Operating activities are the day-to-day activities that happen in order to run the business, all right? So that differentiates between your 3 sections of the cash flow statement. Let's move on down the line to private company. Private company is denoted by letter D. Letter D indicates a company that sells its shares of stock privately and is not required to release financial statements to the public. Let's differentiate private company from public company over here in 11. Public company indicates letter K. And letter K states a company that has its stock bought and sold by investors on an established stock exchange. Stock exchanges in the United States are regulated by the SEC. And if you're a public company, okay, you've got to provide those financial statements to investors and potential investors, okay, in order to tell what it is that the company is doing. How is the company doing? Accounting is sometimes said to be the language of business. How do we read that language? Well, we We use financial reports or financial statements, and we'll talk about those financial statements as the class progresses, okay? But public companies have to issue these financial statements so that they can be available to the public. There's many websites where you can pull up what we might call the 10K or the annual report, okay, for public companies, and it'll give you this information. Whereas private companies, they privately sell their shares. They don't have to issue the stock or the financial statements to the public. All right, next is corporation, okay? Corporation's denoted by letter E. Letter E indicates an incorporated business that issues shares of stock as evidence of an ownership. Let's differentiate corporation from partnership. Partnership is denoted by letter C. And letter C indicates an unincorporated business owned by two or more persons. Well, just by the definition, you've got on C, it's saying unincorporated, and then on E, it's indicating an incorporated business, okay? With a corporation, there's several different characteristics where you can differentiate between partnerships and corporations. One of the easy ones to differentiate is between the separate entity principle. With a corporation, you have the separate entity principle, or sometimes referred to as separate entity assumption. Essentially, it says that the corporation is separate. It's seen separate as its own separate entity from the owners. Whereas a partnership, depending on the type of partnership, is not. Let me give you an example here. When you buy stock in a corporation, if that corporation goes under and it can't pay its creditors, it can't pay back the bank for its loans, do you think that the bank is then going to come after you because you own one share of stock in that company? No. Separate entity principle or separate entity assumption says that the corporation is seen as its own separate entity. It can enter into contracts such as with a bank. It can sue others. It can be sued. It pays its own taxes, etc., etc. It's separate from its owners, which produces limited liability for its owners, where the owners are not personally liable if the corporation fails. The only thing the owners can lose is their own investment. So if they invest in the corporation and pay X amount of dollars for a share of stock and the stock is worth nothing, they can lose that, but they can't lose beyond what they invested. Whereas a partnership, depending on the type of partnership that's set up, because we have several different types of partnerships. We talked about general partnership, limited liability partnership, but in its most basic form, the general partnership, okay? If you're a general partner, you have personal liability, which means the partnership goes under, you could then be held accountable for more than your fair share. You could then be held accountable for the liabilities that the partnership wasn't be able to meet, okay? So that's one difference. It's not the only difference, but that's one difference between a partnership and a corporation, okay? All right, next one we have to go over is accounting. Accounting's denoted by letter A. Letter A indicates a system that collects and processes financial information about an organization and reports information to decision makers. And rather than memorizing this definition, step back and look at the big picture, okay? If you're in business, and let's say you're doing really well, okay? You're making transactions all over the place, selling things left and right. Let's say you're selling 1,000 products a day, right? You have to have a way to keep track of everything you're doing. It's oftentimes said that short-term memory, you remember something like 40% of what happened to you yesterday, okay? You cannot rely on your memory to keep track of how your business is doing. And I realize some people may be smarter than others or remember more than others, but for general, a person can't just rely on memory for how a company is doing. That's why we set up accounting. Accounting establishes a framework. It establishes a standards or principles that set up where everyone can operate the same way so that company A is comparable to company B, and we can see how each company is doing, okay? It keeps the day-to-day transactions recorded, or keeps a record of them. And then it does one step further. It takes those minute records, those individual records, and it sums them all together to make meaningful information, meaningful financial reports. Namely the financial statements that we talk about, the four main ones: cash flow statement, the statement of retained earnings or statement of stockholders' equity, the income statement, and the balance sheet. Let's go on to the next one, number 7, which is FASB. FASB is denoted by letter J. And again, what they're asking here on letter J is what is the first letter of the acronym here? What are the first letters of each word standing for? In this instance, it's Financial Accounting Standards Board. Okay, that's FASB. You'll hear me refer to FASB a lot. One other acronym that you'll hear me refer to a lot, and we'll skip down to it real quick, is number 10, which is GAAP. It's referred to as letter L. Okay? And they again want to know, what do these letters stand for? GAAP, or GAAP, as you'll hear me commonly refer to it, is Generally Accepted Accounting Principles. Okay? These are the principles or the framework of accounting that guide what it is we do. All the things that we're learning, the reasons why you'll be introduced in the next few chapters into journal entries, the reason why journal entries are the way that they are, the reasons why we have different rules for the way you account for inventory, the way you depreciate items, etc., etc. And this jargon will make sense as we move along, okay? But the reasons why we do what we do is because of these right here, okay? Generally accepted accounting principles. The next one we skipped over, unit of measure. Unit of measure is referred to letter B. Okay? And letter B indicates measurement of information about a business in the monetary unit, dollars or other national currency. The reason why we talk about the unit of measure, the reason why that's one of the requirements that we have, one of the principles set up within accounting, is because you have to have a way to compare one company to the next. For instance, if we didn't say that the unit measure had to have been some sort of monetary value, such as a dollar, okay? We could have companies measuring in anything they wanted. They could say, I have 40,000 of something. Well, what does that mean? What does 40,000 on the financial statements mean? Is that $40,000? 40,000 pounds of gold? 40,000 apples? 40,000 Twinkies? 40,000 oranges? What is it that 40,000 means? You have to have a way to compare. And so it may seem simplistic. It may seem basic. And you're thinking, of course we'd have this. But if we didn't outline it, then it wouldn't be excluded. If we didn't say this is what has to be done, then companies can measure in anything they want. So, unit of measure indicates that we measure in monetary units. The next one that we're looking at is, well, we've actually talked about the rest. We talked about GAAP, Generally Accepted Accounting Principles. We talked about a public company as contrasted to a private company. And we talked about operating activities as it relates to the other sections of the cash flow statement, the financing activities and investing activities. So I think this covers all of them. You will want to memorize this, okay? You don't have to now, but at some point before your first test, you will have to have that memorized. Assets equal liabilities plus stockholders' equity. If you have any questions about any of these terms, if they're not quite hitting home for you, please let me know. You can also consult your book because they have a lot of great information about this, or the lecture notes, or the lecture videos. So if you have any questions, just please feel free to email me. I'd be happy to help you. Have a good day.